Welcome back to the deep dive. Today we are strapping on our analytical crampons, you could say. We're heading straight into the latest intelligence on the Mammoth Lakes real estate market, really focusing on the activity through October 2025. Now, nationally, you see the headlines, right? Lots of volatility, high rates, shifting job markets. But Mammoth, well, as we often see, it kind of has its own powerful local gravity. It tends to dance to its own rhythm.
That's a good way to put it. Less about Wall Street, definitely more about, powder days and long-term lifestyle choices.
Exactly. So our mission today is really to unpack that rhythm using the specific data you shared. We want to define what this newly emerged balanced market actually means on the ground. And maybe more importantly, what crucial insights it holds for you, whether you're maybe looking to invest, sell, or just understand the value of your mountain property.
Well, what's immediately clear from the data, I think, is a really key distinction. This is not a collapsing market. The market isn't declining. It's stabilizing. We're settling into what I'd call a healthy, sustainable rhythm. And it's driven by that long-term value and, frankly, the unwavering desire for the mountain lifestyle. That hasn't gone away. The frantic, almost emotional purchasing we saw post-pandemic, that's over. And the days of sellers listing, say, 20% above comps and just expecting a bidding war, well, those are firmly behind us. Balance is returning. And that means preparation, realistic pricing, and honestly, impeccable presentation are now the difference makers.
Right. The difference between a quick sale and really, well, sitting there.
Exactly.
Yeah.
Sitting there collecting dust.
And we see that kind of thesis proven out in the overall market snapshot you provided. Active listings are currently averaging just over 100 days on the market. Now, that number,
Yeah.
it might initially spook a seller, right?
It could, yeah.
Yeah.
But you really need to look closer. It doesn't signal market desperation. What it signals is buyer discernment. Buyers are thoughtful, they're selective, yes, but they are absolutely still engaged. They're ready to move if the property really hits all the right notes for them.
Okay, so let's unpack this, starting with the most active part of Mammoth's housing sector, the condo market. Historically, this is kind of the engine room, isn't it? Catering to second homeowners, rental investors.
Precisely. Yeah, the condo data gives us the most robust picture, really, of current transaction speed and volume.
Yeah.
So year to date, the condo market has tallied 180 total sales.
180 sales.
Yeah, and that translates to a very substantial total sales volume of $175 million.
Wow.
So that money is flowing. It indicates liquidity, sustained interest. It's not like things have just stopped. And digging deeper into value, the median sale price for a condo, it settled right around $810,000.
$810,000 median.
Okay. Let's go back to that days on market metric we mentioned, because this is where the market's behavior gets really transparent.
Right. The 108 days average for active listings versus, what was it, 64 days for the ones that actually closed?
That's it. 64 days for close.
That's a 44-day difference. I mean, that's a massive gap between maybe expectations and reality.
It is probably the single most important number here. It confirms the market is moving quickly, but selectively, just like you said. That 108-day average, it's being heavily skewed by a small percentage, maybe, 15 to 20% of listings that are what we sometimes call wish-priced.
Wish-price, meaning that
priced based on maybe the neighbor's crazy 2021 sale or just reflecting seller optimism that hasn't quite caught up to the new reality.
Got it. So the key takeaway then, for someone listening who might be thinking of selling their condo, is that if they price realistically, they're likely looking at selling in under 2 months, regardless of that kind of scary overall average.
Absolutely. That's the story. If you're priced right, you're still selling fast. Inventory is balanced, sure, but demand has held pretty firm. Inventory levels did creep up through mid-year. They peaked in July with about 160 active listings.
Right, 160 you said earlier.
Yeah, before settling back down to the current 108 or so. But crucially, monthly demand, it never really wavered. It maintained a solid 20 closings per month, pretty much throughout that period.
Okay, so we've returned to this balanced inventory environment where the market is now, it seems, demanding quality. So what specific features are making those closed condos move in that quicker 64-day window?
Well, it almost always comes down to two things in Mammoth condos: presentation and rental readiness. We're seeing really rapid sales for well-presented, updated units, the ones that photograph well, look fresh, feel fresh.
For key, basically.
Exactly, ready for immediate rental pool entry or move in. Buyers know that deferred maintenance, especially in a mountain environment, means immediate, often expensive headaches. So they seem happy to pay a bit of a premium for a turnkey unit that can immediately generate income or just provide hassle-free recreation.
And the opposite is true too, I imagine.
Oh, definitely. Anything that needs significant work or maybe is poorly documented for rental history, it's simply sitting.
Okay, that makes perfect sense. So the condo market, driven by pricing, realism, and utility. Got it. But the single family home sector, the SFH market, that's kind of a different beast, isn't it? We're moving from maybe the rental investor to the more long term, perhaps legacy lifestyle buyer. What kind of numbers are we seeing when we look at those bigger properties, ranging from cozy in town cabins to those true mountain estates?
Yeah, the SFH sector is fundamentally different, mostly because of its limited volume. Year to date, we've only seen 46 total sales.
Only 46. Wow.
Yeah, generated about $74 million in volume.
Hmm.
So the volume is much lower than condos, obviously, but the value proposition is significantly higher and actually more resilient in some ways. The median price for single-family homes has held remarkably firm at $1,325,000
$1.325 million.
in
Huh.
the days on market. They reflect that thoughtful buyer profile we talked about.
Hmm.
68 days for closed sales, 98 for active listings. Pretty similar pattern to condos, actually.
Wait a second, though. If the really high-end homes those multi-million dollar estates are taking, as the inventory data suggests, almost a year to sell, how is the median price holding so firm at $1.325 million? Wouldn't the stagnation at the very top end pull that median down? Or is that middle market, say, the $1.2 million to $2 million cabin, is that segment genuinely that resilient?
That's an excellent critical point. And yes, the stability of that $1.325 million median confirms the incredible resilience of that middle to upper middle price band. The, let's call it $1.3 million single-family home is moving primarily because inventory remains extremely limited there. We've averaged only 20 to 30 listings for most of the year in that category, with only about 5 sales happening each month.
Oh, okay.
So the demand for a quality, maybe entry-level detached home in Mammoth remains incredibly high. The market will pay for that unique segment, even with higher rates.
So supply scarcity is the pressure valve keeping those mid-range prices high.
Interesting. For those buyers then, what tangible features are they demanding? What helps those properties move quickly? Well, beyond the baseline, obviously, of being well-maintained and updated, SFH buyers seem intensely focused on functionality and maybe future-proofing. Buyers are prioritizing realism and pricing, of course,
Yeah.
but also specific tangible assets. Things like garage space. I mean, that's crucial for winter utility here, good natural light, and increasingly the potential for an accessory dwelling unit, an ADU.
ADU potential, that seems to come up a lot more now.
It's huge in mountain economics, really. It provides flexibility. You can use it for multi-generational living, maybe a caretaker unit, or most commonly as a vital source of sustained rental income to help offset the high cost of ownership.
Right, makes the whole thing more viable long term.
Exactly. Those features directly feed into long-term mountain functionality and value, and buyers seem to be looking, 2 steps ahead.
Okay, let's pivot now to some of the external forces that are influencing this localized market, starting with financing. Even though Mammoth has that local gravity we talked about, national rates still matter profoundly for most buyers, right?
Oh, they absolutely do. And thankfully, mortgage rates have offered a bit of a needed breath of fresh air lately.
Yeah.
We've seen them ease into the mid-sixes. That's a significant psychological shift and a practical one from the peaks we saw earlier in
In
the
the
year.
sixes, okay.
Yeah, and that rate drop has already sparked some new interest from purchasers who had maybe pressed pause, were sitting on the sidelines waiting. To be specific, as of October 8th, 2025, the prevailing conforming rate for a 30-year fixed mortgage was sitting at 6.38%.
6.38%.
And what's interesting, especially for the high-value Mammoth market, is that the jumbo rate was actually even slightly lower. It came in at 6.29%.
6.29% for jumbo. And just to clarify quickly for listeners, a jumbo loan is basically financing that exceeds the standard federal limits, right? So it's necessary for most of the higher value homes in Mammoth.
That's correct.
So the fact that the jumbo rate is slightly lower than conforming, that's actually really good news for buyers looking at those $1 million plus properties.
Exactly right. That stabilization across all the rate types is really key to restoring buyer confidence and, hopefully, increasing velocity a bit.
And speaking of restoration, let's talk inventory depth. That long-awaited return to quote-unquote normal supply? I mean, for years, we were almost celebrating having just 3 weeks of supply in certain segments. Now, the data seems to show this is the most balanced inventory Mammoth has seen in, a decade? Giving buyers some genuine leverage back.
Yeah, that return to balance is best illustrated, I think, by the months of supply metric. That just tells us how long it would take to sell every existing home at the current rate of sales. And for the general condo market, we're seeing roughly 6 months of supply. That is like textbook definition of a healthy, balanced market.
6 months for condos, generally.
Generally, yes. However, the market isn't uniform. There are nuances. If we look specifically at the high-end luxury condos, say, those priced above $2 million, they're still extremely tight. Only about a 3-month supply there.
Only 3 months for the luxury condos.
Yeah, it's just that the $2 million plus condo buyer is maybe less impacted by rate fluctuations, perhaps using more cash or large down payments. And they seem to be prioritizing that slopeside convenience above all else, keeping demand really hot for those prime locations.
Okay, so tight supply for the luxury convenience crowd. How does that contrast with the single-family home luxury segment? You mentioned those were slower.
It's basically the inverse, which is fascinating. In single-family homes under $3 million, supply is manageable, 2 to 6 months, depending. But if we look at that highest tier, those luxury homes over $3 million, they are taking much, much longer to sell. Right now, they're showing an 11-month supply.
11 months.
11 months. Buyers in that absolute top tier are being extremely selective. They're holding out for perfection or demanding pretty substantial price adjustments. They're just not willing to compromise at that massive price tag.
Okay, now here's where it gets, as you said, really interesting and potentially complicated. The unavoidable wild card of insurance and risk in these mountain properties. I mean, I've heard stories myself, closings delayed for weeks because carriers pulled out last minute or suddenly demanded entirely new inspections. How pervasive is this insurance challenge right now? Is it truly the new variable in basically every mountain deal?
It really is the new constant, unfortunately. Insurance availability remains that challenging wild card. And yes, it affects pretty much every transaction now. Carriers are definitely continuing to tighten their underwriting, especially in what they deem higher risk zones. And the complexity of just securing adequate coverage at a reasonable price, it's absolutely increasing. This isn't an abstract problem anymore. It has real, tangible closing implications.
So what does that mean practically?
Well, for sellers, if you don't have current, confirmed insurance documentation ready to go, you risk significant delays, like weeks. And for buyers, proactive coordination is now essential. Engaging specialized insurance brokers early, making sure the property meets modern defensible space requirements.
Stuff you maybe didn't think about 5 years ago.
Exactly. It's crucial now for ensuring a smooth closing. If a property is perceived as higher risk, maybe due to location, age, lack of maintenance, it can honestly kill a deal pretty quickly.
Wow. Okay, so let's try and pull all these threads together then. What does this all mean for you, the listener? Whether you're maybe considering selling that rental condo or perhaps buying that long-term family cabin you've dreamed about.
Well, for buyers, I think the message is overwhelmingly positive right now. You have more inventory to look at, and definitely softer competition than recent years. This is really your opportunity to take that thoughtful approach we talked about earlier. Do proper due diligence without the intense pressure of an immediate deadline breathing down your neck. And importantly, while rates remain relatively favorable, in the mid-sixes, you actually have some leverage.
Leverage how?
Well, you might be able to negotiate better terms, maybe secure seller credits towards your closing costs, or perhaps get a small allowance for maintenance items that just wasn't even on the table 18 months ago.
Okay, so opportunity for buyers who are prepared. What about sellers?
For sellers, look, the market is healthy. It's fundamentally sound. But it is not forgiving of mistakes anymore. The days where listings sold purely based on emotional momentum, they're gone. You absolutely must price realistically from day one. You need to internalize that $810,000 median for condos, the $1.3 million median for SFHs, and present your property at its absolute best. Listings that stand out visually and strategically, the ones that photograph well, the ones with that ADU potential we discussed, they are still capturing strong results. But mediocrity, or that wish pricing, that's going to lead you directly to that 108-day sitting average, or maybe even longer.
Right. That brings us then to our core conclusion, it seems. The fact that median prices have essentially flattened, they're holding steady, condos near $810K, SFHs around $1.3 million, that's actually the clearest sign of market maturity, right? Not weakness.
Precisely. This is a robust market reflecting sustained, dedicated lifestyle demand. People still want to be here.
It's a balanced market.
It's a balanced market. And that leads me to maybe a final provocative thought for you, the listener, to consider. Given this stable pricing and the sustained demand for the lifestyle, how might this tightening insurance market fundamentally shift which types of properties are prioritized for long-term value here in Mammoth Lakes?
Interesting question.
Think about it. The lifestyle buyer isn't going anywhere, but now that lifestyle, that property, must be insurable. Long-term value isn't just about the mountain views anymore, is it? It's also about defensibility, predictability, insurability. So how will the market start to value, say, the traditional rustic cabin, which might face higher risk scrutiny from insurers, versus maybe the well-maintained modern home that offers ADU potential and specific safety features simply because that proactive insurance coordination is now essential for every single closing?
It forces a reflection on short-term momentum versus long-term sustainable, insurable value.
Exactly. Something to really mull over as you look at this unique high-altitude destination and its future.